Hey guys, welcome back to the channel. Today I'm going to be covering the fact that Bitcoin has just dropped below $20,000 and the previous cycle's all-time high. So if you are new to the channel and you want to show some support, please leave a like and subscribe. So currently we are at $19,000, which is below the prior cycle's all-time high in 2017 at $19.8 thousand. So if I just scroll out here and zoom out, we can see how never before has Bitcoin done this. The 2011 cycle peak was at $32. The next bear market, the lowest we went was $167. And then the 2013 cycle peak was around $1,250. And then the 2018 bear market, the lowest we went was around $3,200. So this is sort of uncharted territory where we've never seen Bitcoin fall below its prior cycle's all-time high. And I think part of the reason is because we didn't really have as much of a mania blow off top, so there's less room to go down on these drawdowns in the bear market. You can also see how we are below this yellow line. This is the 200-week simple moving average, and the prior two bear markets, it has corresponded to the bottom. So if we go to 2015, we can see how in January and in August, the bear market low was around the 200-week simple moving average with only 2 wicks below it. And in the 2018 cycle bear market, there was a low approximately at the 200-week simple moving average. We didn't really fall below it, and the only other time in history we fell below it was in the March 2020 capitulation, which was due to some global conditions. So it's pretty interesting to note how we are below it, and we are below it by about 14% or so. So I think this goes to show you how oversold Bitcoin is, and historically, given these moving averages, how low it is, considering, all things considered, right? We are also pretty close to the 300-week simple moving average, which is this blue line. Currently, it is at $16,600. The last time we got close to this was in March 2020. So a similar event where we are below the 200-week simple moving average and pretty close to the 300-week. So I think it's interesting to note how this was a V-shaped recovery, as well as these 2 wicks below the 200-week simple moving average, where Bitcoin did not spend too much time below it. It was kind of, a brief wick here, and then we quickly got back above it, ultimately being short-lived, and then we kind of started trending back up. So I don't know exactly where Bitcoin's going to go. I don't exactly know if it's going to V-shape and recover this 200-week simple moving average and start hovering around $22,000. It's pretty hard and impossible to predict those things, but all things considered, I think we are at some pretty historically low levels, and for that reason, I believe, this is my opinion guys, I believe this is a great region to start accumulating Bitcoin for a longer term time horizon. And what I mean by that is, obviously, if you start accumulating here and maybe starting to DCA in, the next few weeks those buys could be underwater, they could be at a loss, and I think that's pretty reasonable to expect. But if you zoom out and you take a 2-3 year step approach, then I don't see why this is a bad region to accumulate. We are at historically low levels below the 200-week simple moving average and pretty close to the 300-week simple moving average. Long term, I think it's very hard to see why this would be a bad region to accumulate. Obviously, we could go lower to say $12, $14, or $16,000. I think those are very real possibilities and targets to consider. But I think it's kind of similar to the 2018 bear market where some people were accumulating at $4,500, and yes, it went down to $3,200 the following few weeks. But all things considered, taking a multi-year approach, that was a reasonable area to accumulate, and long term they did very well on that investment. So I'm going to be starting to DCA in here at $19,000, and I will continue to DCA all the way down to $14,000 and $16,000. Ultimately, that is where I believe the bear market bottom will end up being, at $14,000 to $16,000, where we briefly wick below the 300-week simple moving average. But I think, all things considered, this is a great region to start accumulating and DCAing, right? It's not an all-in approach. It is going to be a 5 to 10% buys every so often. So maybe you buy some at $19,000, and then some at $16,000, and then a little more at $14,000, and taking a slow, steady approach instead of going all in. Again, this is not financial advice. This is what I am planning on doing, and just taking a logical approach, considering these moving averages, considering how we are at historically low levels. This is just my opinion on the market and my opinion on the $20,000 level being broken. So if you guys enjoyed my thoughts on this, Please leave a like and subscribe. And as always, I will see you in the next one.